Hi, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. Well, for now, the market has stumbled into the red all throughout the day. We are cruising around nicely around that 23,750 to 23,800 mark. Right now, we have collapsed a bit. We are at the lowest point of the trading session, a fall of 122 points from the highs of the day. Let's take a look as to what is causing this pressure in the markets in the last few minutes. Well, SBI is one stock which is down 1.25%. Banking index has been on the back foot throughout the day. So, in HDFC Bank and ICICI Bank, these have been the pressure points. And right now, ICICI also under pressure. So, HDFC is actually holding up quite okay. ICICI Bank is in the red right now. Infosys is the one which is down. Titan, JSW Steel, Power Grid. These are some of the other names from the frontline index which is in the red. What's holding in the green then? Autos are doing quite well. Tata Motors up almost 2%. M&M doing well for itself. ITC has managed to hold on, and TCS2 is in the green right now. So, very broad-based moves coming in. Not really major sectoral gainers today. From the FMCG pack, apart from ITC, UBL also deserves a mention. And real estate continues its good run in the sense that Phoenix Limited is up 3%, even though the likes of DLF, Godrej, Lodha are seeing a bit of a profit booking. And profit booking also visible when it comes to the PSU banking index. So, apart from SBI, Union Bank, Bank of Baroda, Canara Bank, they're all in the red right now. But from the broader markets, just taking a few more names because Amber Enterprises has shot up 20% as we speak. Yesterday, that stock was up, okay, it's up 6%. For the week, it's up 20%, I beg your pardon. Today itself, it's up around 6-7%. Finolex Cables has managed to gain around 8% for the day. Triveni Engineering is doing quite well. And then you also have RBL Bank, which is shot up 5%, Biocon, Tata Investments. So a lot of these names actually trending towards a higher point of the day, despite the fact that the rest of the market or the frontline index is actually coming under pressure as we speak. On the losing side, Intellect Design, Mankind Pharma, KEC, Go Digit. These are some of the names which are in the red right now. But we're also watching out for the headlines coming in from the North Block as well as, of course, Delhi, given the fact it's the budget season and we are counting down to what's really happening with respect to the policy making action. And today there was a meeting that the Prime Minister himself conducted with the economists, and there are the visuals for you up on the screen. He did discuss a whole host of issues, but let me take it across to Sumit to get more details as to what was on the agenda and what were the key discussion points. Sumit.
Well, ahead of the budget on Feb 1st, 2025, the meeting is happening between Prime Minister Modi and top economists of the country, sectoral experts. Finance Minister Nirmala is also present in the meeting. Well, it is circled around maintaining India's growth at a time of global uncertainty. That is a theme around which discussions are happening. Last week, FMC Sitharaman met State Finance Minister, took their suggestions, what they want ahead of preparing budget. That's coming on Feb 1st. So today, these inputs coming from top economists, sectoral experts and other dignitaries, it helps PM framing the way on which India's budget should chart its course. This meeting is important from the point of view of India's economy that is doing well, still the largest economy and fastest growing economy in the world. But it has to go forward. Challenges are plenty in budget this time. So we will see a lot of announcements coming for middle class, taxpayers, industries. But what is the larger and macro picture that is going to be discussed in the meeting that is currently underway at Niti Aayog. Niti Aayog CEO and Vice Chairman are also present in the meeting.
An important one at that, but let's see what really comes out of that and what they do to spur the economy, because as per reports, it's the middle class and the masses which have been reeling under a bit of pressure, and consumption has missed the estimates as well as private capex has missed the mark versus what the government expected. But time to put the spotlight back on the markets. Devin Choksi on the fundamentals, Naresh Marani and Kunal Bothra on the technicals. Naresh, let me begin by asking you, there's a bit of a slip from the highs that we have seen. Worrying, or is this something which you expected? Devin, Naresh will have to unmute, yeah.
Yeah. So if you look at the markets, what we've been seeing for the last 3 weeks is we see one big day when there is a lot of volatility and markets make a 500-600 pointer intraday move. And for the next 3-4 sessions, we just continue to be in this band. So we saw this on Friday. Now we are back into the move of, say, roughly 23,500 to 24,000. So we are still stuck in the band, and there is no follow-up price action as such. Even the small cap indices are almost on the flatter side. So for now, we wait for either of these price points to break to look out for another trading band.
So that's a view coming in at the index level. Kunal, today the banking index has clearly been the underperformer. What do you make of it, and is that the likely trend for the next 10-15 days?
Well, I would not call it as an underperformance, Nisha, but I think it's more of a range-bound action for the indices as well as for the Bank Nifty. Now, I'll call it range-bound because 3 days back there was a range of almost 700 to 800 points for the Bank Nifty. Yesterday, when the indices recovered, the range for the Bank Nifty on intraday basis was just around the 300-350 points, for the banking index on the spot basis. And today's price action indicates that it's a range of almost 200 points netted for the Bank Nifty. So which means that what we are going through is a process of very narrowed or a contracted range for the banking index. What matters over here now are two important levels to watch out for. One on the upside would be 51,500, which is yesterday's high for the banking index. That would act as a major breakout level. So right now it's acting as a resistance. But in case if the Bank Nifty manages to break past about 51,500 mark, that's where I would believe that you might probably see an accelerated momentum coming back into the banking index. And on the downside, I would believe 51,000 on the spot levels could be acting as a support. So we could be looking at next few days of very listless kind of a price action or a very contracted range for the banking index.
That's the view coming in on the banking index. Gentlemen, this is Snehi also joining in on the show. Good afternoon. Devin, coming to you. I want to take that point further on the banking index. PSU banks have been shaky over the course of the week, but did see some strength coming in yesterday's trading session. What's the outlook on playing the entire banking space with your Big B private banks or the PSU banks?
Well, on one side, one tends to believe that the rate cut scenario will emerge stronger somewhere closer to the February. And also, I think once the government gives indication about the spending budget, etc., on the infrastructure, it is expected that Prime Minister's meeting today with economists is also going to play a meaningful role in form of arriving at, I think, some consensus on pushing the growth forward, for which I think the rate of interest needs to come down. Though the bankers differ on this particular proposition, but my take is that I think unless the rate of interest comes down, I think which is not going to happen in one quarter, it is going to be a process of few quarters hereafter. Unless that rate of interest comes down, I think investment is not going to come in hurry as far as infrastructure is concerned. So given that particular challenge, I believe that I think the sooner than later, I think this particular expectation of reduction in rate of interest will materialize. And should that happen, then probably I think the immediate beneficiary would be some of the large public sector banks, because their mark-to-market gain on the bond portfolio will start looking up, and that's where probably I think the market will follow. At the same time, I think this budget would be an interesting one if the finance minister gives indication about further consolidation of public sector bank. Should it happen, probably I think you are likely to see the higher amount of participation of players into the PSBs in the marketplace.
Okay, that's the outlook coming in on PSU banks. Naresh, want to get a sense from you from the outlook that you have on the entire capital goods space. We have reports that have emerged recently that say that India is mulling relaxation of a quarterly spending limits. How do you think this is going to affect the entire capital goods space, especially the likes of infrastructure going ahead that the budget is now coming closer? What's your take on this, and what are the stocks that you are liking from the cap goods space?
So we've been continuing to listen to the fact that there should be more spending in the H2, but we are already in December right now. So how much of it gets bunched up in the next quarter? But if you look at the price action, that is not great. So if you look at something like a Siemens, the stock has made multiple attempts around 8,000 back to 6,500, and that is what has been going on for the last 6-8 months. L&T tried to make a breakout move about 3,850, went into a new all-time high, and now we are back to 3,600. So for now, it seems like a consolidation move for majority of the names, whether it is ABB, Siemens, or even the mid-cap side of it. But I would be interested in L&T because that's the one which did not see a massive run going into 2024. So that's a consolidation where on dips to 3,500 to 3,300, one could be looking at a accumulation zone. And the next time it goes about 3,850, it could actually make a breakout leadership move.
View coming in on some of these industrials, but talking about industrials and taking a leaf from that, Devin, what's your sense of the electronic manufacturing space? I mean, one day it's Amber, which is up, one day it's the turn of Dixon, Keynes, SGS, EPAC, Durable, PG, Electroplast, all of these keep on moving in tandem one day or the other. What do you make of the entire pack, and what within this would you prefer?
Well, I guess I think the EMS definitely is particularly the ones which are in the consumer durables. They are the ones I think which are largely seeing the large amount of growth. Also because of the fact that I think one after another OEMs I think coming into the companies which are already into this space. You mentioned those names. In my viewpoint, I think yes, I think the opportunity size is growing and growing big, but at the same time everything is priced in. So unless you see a meaningful price correction into the stock, I would not think that I think immediately it makes buy opportunity. Maybe I think if you are not seeing the price correction, then we'll have to tag along with the higher valuation for a reasonably good time till the time the valuations are driven by the momentum. But I think that's a call that one has to take as a trader, not as an investor.
Okay, that's the take coming in on the EMS players. But on that note, time for a short break on this edition of Closing Trades. Naresh, Kunal, as well as Deven will be with us on the other side of the break as well. So you stay tuned. We'll be right back.
Close to the lowest point of the trading session. That's how it's panning out for now. SPI, Infosys, these are the big drag at the index level. Having said that, let's also address some of the stocks in news right now. Tata Investment is the stock which is buzzing around, and so is Tata Motors. That's of course because ET reports suggest that work has started on the $2 billion IPO, that is Tata Capital. So the stock is in focus on account of that. Biocon is also buzzing away in the trading session after its European partner Zentiva has received an approval for its complex formulation. So we are watching out for that one. Gulf Oil is in focus because it's teamed up with Nayara Energy to bring the premium automotive lubricants to the fuel stations nationwide. So that stock is also in focus. And we're also watching out for Greaves Cotton because one of its subsidiary has filed for IPO or filed the DRHP for now. So that stock is also in focus. Naresh, what's the sense on the charts of Greaves Cotton as well as Biocon?
So Greaves Cotton has made a large move in the last, say, 2 weeks, wherein we saw a big gap up move, and we went back to the 260 mark. Now, 260 was the high the stock made back in 2022, and the stock has been sideways for a very long period of time. Even back in 2000, say 17, 18, the stock used to be 170. So it's not been a great return from that point of time. But for now, 260 is a resistance. If it sustains above those levels, we get into a further up move possibly, and one would have to keep a strict stop loss at 240. Biocon, a name which has had multiple starts, but 380, 385, and 310 has been the range for the stocks. For now, we are in the middle of the range.
Okay, so that's the take coming in on both of those stocks. Devin, coming to you now, we just spoke about Biocon. If I take a look at the year-to-date moves coming in of all of these sectors, you of course have realty on the top over there, but pharma is closely catching up. You have 37 odd % gains coming in on realty, pharma somewhere at 34, so quite close to being the highest sectoral mover on the year-to-date basis. Tell us what sense are you making of these moves that we've seen in the pharma space, because it's not been an even year for the pharma space. They have seen a gap of gains and losses coming in. So tell us what's the outlook going ahead, and how good is this going to be as a defensive sector going into next year as well?
Well, I think pertinent point out here is on one side, the complex and the specialty generics pharma companies are the ones I think who are taking the maximum advantage out of the current situation. The likes of Dr. Reddy, Cipla, Sun Pharma have actually their share of portfolio of products which they have put into the advanced markets like US, where they are fetching better realization, and at the same time, I think relatively less amount of competition on the product as well. So that is fetching them better margin because of the pricing power that they assume on some of the specialty products. At the same time, the pipeline inventory, which used to be on a higher side, actually came down, and that helps, I think, most of the pharma companies root across better margin performance. And that's what I think one has experienced in the last few quarters. Going forward in 25, I believe that I think the situation by and large continues for them. The growth in the business is continuing from the new launches, specialty product launches. At the same time, I think the stable margin performance largely because of the input costs remaining relatively lower. So we remain cautiously optimistic, but would look for the opportunity to buy when the market gives corrective downside into some of the quality stocks.
Cautiously optimistic, looking for opportunities to dabble into select names from the pharma sector, especially the specialty, chemical as well as specialty drug makers. But Kunal, what's the sense on the charts of Triveni Engineering and Finolex Cables if you track either?
Yeah, I do track both of them, and I think both these charts are now looking very attractive, especially for Triveni. Looking at the charts, some time back the stock was into a range, forming a bullish flag formation. Today seems to be a strong breakout day for Triveni. Engineering. The stock has moved from a base of 375, where this rally started off for the stock mid of November, start of December, towards a point when the stock completed this uptrend first and then consolidated at the 475 levels, which means this was almost like a 100-pointer initial rally and then a 40-50 pointer range for Triveni Engineering. The stock seems to have now confirmed a breakout yet again about that 475 mark, which means we could be looking at the next set of targets for the stock around at least 575 odd for the stock, looking at that 100-point up move previously. So I think that's another name which traders could look out for. Finlex Cables also, on the other hand, I think is now about to challenge its 200-day moving average on the upside. Now, what's interesting about the stock is formation of a double bottom for Finlex Cables. The stock at 1125 formed a double bottom for itself, and today's move indicates that that bottom would now act as a major support for the stock. So it's not yet confirmed a breakout, but I think after today's move and the likelihood of a major bottom formation for Finlex Cables, we could be looking at a further upside till at least 1350, 1400 levels.
Okay, that's the view coming in on both of those. Naresh, coming to you on the flip side, let's talk about two stocks that have been one of the top losers in today's trading session. Give us a sense of what you're seeing on the charts for KEC International as well as Torrent Power.
So KEC International has been in a strong uptrend. So for now, after that recent move from 1050 to 1300, looks like a consolidation still in place. So not really a bad indication. Or dip to 1050, 1100 would actually be a buying opportunity. Same is the case with the Torrent Power, wherein the stock has corrected already. Going back to 1300 is a very strong support. So 1300, 1350 would be a good buying price.
Out for those price levels, keep an eye out on those two names. But Devin, I was just going through some of the stocks which have done well this year, and the theme that stands out is financialization of savings. I mean, BSE is up, but if you look at the last 1 month or so, KFin Technologies has been doing quite well as well. Have you tried KFin by any chance? Do you have a view or any other name from the entire sector and the theme?
The overall, I think the financialization story is definitely helping the stock exchanges, the depositories, the registrars included. And probably, I think the peer participants who are actually also connected from outside this, who are the AMC companies at the same time because of the larger flow of money coming through the mutual fund into the market. So to a greater extent, I think this entire space remains absolutely a strong area. And as we see the progress happening from $5 trillion economy and $5 trillion market capitalization going to $15 trillion market capitalization by 2035-37, I believe that this is where probably I think you are going to see the maximum amount of participation from some of the financial market intermediaries into the market. Of course, I think at today's point of view, I think if one looks at it, I think most of the things are priced into the current market price. But as we always get opportunity during the corrective markets, I think that's where one would like to look at some of these companies which are really looking interestingly positioned from investment perspective with a roadmap ahead for next 10 years.
Okay, interesting take coming in over there, Devin. Kunal, coming to you on a year-to-date basis, some stocks from the consumption space overall have done really well, the likes of Trend, Zomato. You have a Kalyan Jewellers up there. Voltas has joined in with a 70% gain year-to-date. It's looking good for some of these companies. Give us a sense on what you're spotting on the charts for Trend and Zomato, because both of these have individually seen quite the run-up of more than doubled in share price over the last year itself. So tell us what's the outlook going ahead as well.
It looks like that the trend should continue for both of these names. Now, we look at trend first, that how the stock from previously I think 1500, 1600 rupees just about I think 2 years back went up to almost 8,000 plus levels, and from those 8,000 plus mark, the stock corrected more than 20%. So what we've seen this year is not just the stocks making new high for themselves and moving up significantly higher. We've also seen second half of this year, many of these stocks which have been huge outperformers, they've gone through their fair share of correction. So which means now that the risk reward would start to look a lot more attractive for these names. for someone who's looking at a longer term time frame. But you also have to be ready for many of these stocks to get back into a potentially time-wise consolidation, because when stocks run up 3x, 5x, 10x in a very short span of time, there's bound to be a phase where for a few quarters these stocks may consolidate or get into a time-wise correction. So I believe that there could be a possibility that trend could be one of the stocks which may get into a time-wise correction. However, I think at 6,500, 600 levels, we've seen ample evidence of support for the stock price, so that could become a very good entry point. Zomato, I think on the other hand, from the earlier names which you mentioned, that's another stock which looks fairly attractive, and especially with the point that the stock has already gone through a 15% kind of a correction from 300 plus levels towards 255, 265, which was the recent support for Zomato. So I think closer to 265, Zomato also could be a very good long-term buy.
Okay, Zomato is something which could be a long-term buy, but time now to take the closing trade ideas from our technical experts. Naresh, you go first.
So, liking ITC Limited, the stock is trying to make a short-term breakout move above the 480 mark. Looks interesting, relative strength as well. Stop us at 475, target price of 487 on BTST and maybe 500, 520 going forward.
Your closing trade idea?
I'll go with the buy on Page Industries. That's a chart which is looking very attractive, especially after the last 2-3 days of a very mild correction for Page Industries. So expecting the stock in this rally or in this leg of up move to rally up by at least another 5% to 7% further from today's closing.
PH Industries hasn't done much otherwise, but perhaps on the charts it's looking good. On that note, we'll step into a very short break, but before I do that, let me thank Devin for joining us today and talking to us about the fundamentals of the market, and season's greetings to you from the entire ET Now family as well. But for now, a bit of a red on the screen. Let's see whether Santa paints the town red or green.
Hi there, welcome back to Closing Trades. Before we move on and welcome our next guest on board, let's just quickly take a look at what the markets are doing. Not much movement happening when it comes to the benchmarks, but it's a small cap index that seems to be holding on to some gains and is doing pretty well in today's trading session. A slight bit of an uptick coming in on the small cap index in the last couple of minutes or so. 0.3% higher right now is where that index is outperforming the benchmarks as well as the mid cap index. But on that note, let's welcome Sudeep Bandyopadhyay, the Group Chairman at IndiTrade Capital, on board. And Sudeep, thanks so much for joining us on the show. Now, I want to draw your attention to a couple of names from the entire defense pack today. We've had two very bullish notes coming in from Elara as well as Phillip Capital, highlighting how they could expect fireworks when it comes to the defense sector next year. What's your take on the names like HAL, Bharat Dynamics? Tell us, what are you making of the entire defense pack now?
Well, defense, of course, is an area where there is a lot of action. And undoubtedly, the buoyancy will continue in the defense space. Make in India, as far as defense is concerned, has been a huge success, and rightly so. The opportunity of Indian defense companies to supply to the global market is also very much there. So some of these companies, which are let's say in Mazgaon Dock or Cochin Shipyard or Garden Reach Shipbuilding, I think all these have got a very significant long-term potential. We are also extremely bullish on defense electronics. So Bharat Electronics continues to remain our favorite stock. The question is the valuation. I think everything else, as far as defense is concerned, is absolutely perfect. The valuation needs to be carefully looked at before buying into some of these stocks, because undoubtedly they will continue to get orders, they will continue to do well. But are we picking up the stock at a valuation which is full, rich, or kind of they are overvalued? That is what the question is. So according to us, I think Bharat Electronics, being in the defense electronics, being a very well managed company, having scope in all three arms of the armed forces, which is Air Force, Army, and Navy, will have a significantly long runway going forward. The order book is full, continues to get orders, and I think the execution has been exemplary. So Bharat Electronics has been our favorite stock and will continue to remain our favorite stock. There has been a bit of a correction in the recent past, and this probably is an opportunity for a long-term investor to buy into Bharat Electronics.
Electronics is one stock which can be good for long-term investors. Sudeep, hi, Anisha also joining in the conversation. Well, the year 2024 was marked by the kind of flush that we saw of IPOs and the kind of money that got drained out as far as the primary market is concerned, if at all. In 2025, we have interesting names lined up, right from a LG to perhaps an OYO to Tata Capital, which is in news today, to a Flipkart. Anything that you're watching out for closely as a big IPO candidate that you might be interested in for 2025?
Well, Flipkart will be an interesting IPO, and we will definitely watch that. This will be a unique kind of a company which is coming to the market. Amazon, of course, is not in the market, and so we will not know the relative position of Amazon in India. But Flipkart definitely will be a good IPO to look at. I am also interested in OYO. They had tried a few years back. Things didn't work out. They are again coming for the IPO. It's an interesting business with a lot of traction, and travel tourism doing so well. I think OYO will also be watched very, very keenly. Of course, Tata Capital again is an interesting IPO which is being talked about since today morning. A lot of Tata Group companies got excited because of the possibility of this IPO. So, to my mind, OYO, Flipkart, and Tata Capital, if that is true, IPOs will be looked at definitely. Very interesting IPOs and will be watched keenly.
Okay, well, but let's also revisit the year that has been 2024 for the IPO space. Lots of action coming in from the primary market. We've had some very marquee listings coming in next year, and also to keep an eye forward on what we can expect in the primary markets over the course of next year. Let's bring on board my colleague Gaurav, who's here with a snapshot of what this year has shaped up to be like for the IPO world.
When we talk about 2024, it is definite to say that IPO was one of the biggest hits in 2024. In fact, when we talk about some of the numbers, in 2024 itself, we have seen the record-breaking number in terms of number of deals as well as number of value of deals in terms of secondary market activities. We have crossed around 1.6 lakh crore rupees in terms of value in 2024 in terms of values. At the same time, this is also was a record-breaking after the year 2022. Let's not forget that it is not just this. We have also seen the biggest IPO of India in 2024. Earlier it was at LIC, which raised around 21,000 crore rupees, but in this year we saw Hyundai Motors came up with the IPO and they raised around 27,000 crore rupees via IPO. And it was not just the IPO size, even with this size of IPO, we saw subscription hitting more than 2 times for Hyundai Motors. So definitely there was some euphoria as well as there was some positive response in terms of IPOs. Other than that, let's also look out at some of the companies who were there and who were actually buzzing. The mainstream IPOs and the highlight of the 2024 remains with Hyundai Motors, Swiggy, NTPC. Then we have got Vishal Mart, which was recently listed. Other than that, we also had some new age technology like Ola Electric and Mobility, Vari Energies. These were some of the hit IPOs where we saw a tremendous response as well as a size of the IPO was actually significant. Other than that, when we talk about these players, it was not just the size. These players also outperformed the market. So when we talk about Swiggy or Bharti Hexacom, these companies not only delivered good returns when it comes to listing, but also delivered good returns after listing. We have got Swiggy who delivered more than 40%, Bharti Hexacom more than 40%, and at the same time we also had some of the multi-baggers in terms of IPOs. So we have got Jyoti CNC, Premier Energies who delivered more than 200% of the returns post its IPO. Other than that, we have got Orient Technologies, EPAC, Platinum Industries. Now you may think that 2024 has now ended and we may not see that rally, but it is not true. In 2025 itself, we are seeing some kind of same pipeline for IPOs. In fact, when we talk about numbers, we are getting 34 companies who have already got approval for the IPO perspective, and 55 companies are already waiting for approval. These 34 companies can raise up to 50,000 crore rupees in 2025 itself, and the 55 companies who are waiting for approval may raise around 1 lakh crore rupees. And in fact, when we talk about these companies, 2025 might be a year where we may see the holding companies actually listing their subsidiaries, and that is the reason why this is going to be special. So we have got some big names here. We have got HDFC Bank, Hero MotoCorp who may come up with their subsidiaries IPO. We have also got Reliance Industries. We know that Reliance Jio has been in talk of IPO, and it has also been a big short player. Also, when we talk about some other players like Prestige Estate, Canara Bank, they are already listed, waiting for listing. Other than that, we also have some mainstream IPOs which may come, which is LG Electronics, NSDL. Then we have got Hexaware Technologies. So a lot of things are going to come in 2025 as well. So definitely 2024 2024 was a big year for IPO, but let's not forget that 2025 also has a strong pipeline, and on back of this, we will be definitely watching out on new companies and new listing and how they trade for investors in coming years.
Okay, so the primary market action will continue to be heated in 2025 as well. Naresh, but what's heated right now is the chart of RBL Bank doing quite well, and the other one is Tata Chemicals. It's come off from the highs of the day, but still going strong in that sense.
So if you look at RBL Bank, it has been making bounce backs, but again, back to the same prices. So it made a bottom around 155 on the gap down day when there was an announcement. 150, 154 levels, bounce back again towards 180. Now we went back to around 150 again. Today we are back to say not even crossing previous day's highs above 165. So it's just a bounce back. But the fact remains the stock has gone nowhere for a long period of time. It's available at the same prices where it was in June 2020. So it's a risk reward area wherein it can make a full reversal out here. So RBL Bank still looks interesting.
That's a take coming in on RBL Bank on the charts. But Sudeep, want to come to you, draw attention to the real estate space. Every single day, for the last couple of trading sessions, we've had some or the other news flow that's coming in for Nifty Realty. It's done pretty well as an index on the year-to-date basis as well. On the week-to-date basis also, that index has done pretty well. In fact, top gainer on the week-to-date basis, 1.5% uptick. Tell us, what's the sense that you're making of the real estate space? Because you have announcements coming in from Prestige. Today, you've had Oberoi Realty. A whole chunk of brokerage notes coming in with very bullish views coming in on Oberoi Realty as well. Tell us your view on that stock and the overall sector also.
Well, I've been positive on Oberoi Realty for a long time, and I continue to maintain my view. Valuations have reached a certain level, but I think if you're a long-term investor, there's absolutely no problem in buying Oberoi Realty even at current levels. The project pipeline, the quality of construction, and the real estate demand all justify the kind of recommendation as far as Oberoi Realty is concerned. Overall sector, our view has been positive, and we believe that when eventually interest rate starts coming down in the economy, things will improve even from here on. Look, real estate moves in cycles, and I think we are somewhere close to the middle of an upswing as far as real estate is concerned. It started post-COVID, the first phase of the COVID, and I think it's going to continue for the next few years. So this is a great time for real estate companies. Amongst other companies, Godrej Properties is one of our other favorite stocks. And again, that does look good for long term.
That's the sense coming in as far as real estate pack is concerned. But Kunal, it does seem like we are headed back around the 23,700. If we go below that, does the texture of the market change?
Yeah, it does to a larger extent, Nisha, because what this could also confirm could be a third consecutive day of close below the 200 DMA. So it's not just the level in terms of prices, but it's level in terms of indicators, which I think could be a concern for the benchmark indices. And we've seen historically that whenever the index has struggled to surpass above its long-term moving averages for a sustained period of time, it actually results into the index, drifting into a bit of a sluggish trend on the downside. And I think it also then depends on which are the kind of sectors which get back into a zone of weakness. So for example, right now we're seeing metal stocks getting into a weaker zone, PSU banking stocks seeing slight bit of profit booking or correction amongst themselves. You've seen the IT stocks, and especially the mid-cap IT names, slipping over the last few trading sessions. So I believe that when you have such kind of a level for the indices which is trading below its long-term moving averages, it adds to the pressure amongst a lot of sectors which have been historically doing pretty well for themselves.
Okay, well, time to take some BTST trades coming in. Naresh, you go first. What's your BTST trade?
So first would be a buy on ITC. The stock is trying to make a short-term breakout. Stop loss at 475, target price of 487. Second is a buy on Indigo. The stock broke out today above the recent swing highs. Good momentum here. Stop loss at 4570, target price of 4700.
Okay, so Kunal, coming to you, what's made it to your radar? What's your BTST trade coming in?
So I'll go with the buy on ITC, which I recommend in the morning, looking attractive. The stock confirming a breakout above its 50-day moving average. So expecting the targets to be same at 488. Stop loss could be kept now trailing towards at least 470 mark for ITC. And on the second side, I would believe ICICI Pru is a stock which is showing initial signs of a recovery after being into a downtrend for almost like the last 4 or 5 weeks. So looks like the stock could get back into a recovery mode. 690 could be an immediate target for the stock, and stop loss could be kept at 640.
Okay, so those are the top recommendations coming in from our technical experts. But Sudeep, I understand this is perhaps going to be our last conversation of 2024. If you had to name a big theme of 2025 or call out a big stock, what would that be?
Well, I think my call would be on Reliance. I think the value unlocking process will definitely start in 2025. We are already talking about Reliance Jio IPO. There will be something happening as far as Reliance Retail as well. So, if I have to pick up one stock, I think that will be Reliance Industries, where things should happen in 2025. If I have to pick up, one theme, I would pick up life insurance, and there I'll pick up LIC. I believe that a lot of reforms are being proposed both by IRDA as well as the government of India. Now, one area which everybody is targeting is reducing bank assurance so that banks, the advice of banks is not polluted by their commercial interests. And that does affect pretty much all the large insurance, life insurance players, except LIC, because their bank assurance is insignificant. So LIC definitely will be getting a unique advantage when bank assurance gets restricted. The second thing which is being talked about is life insurance companies getting permission to sell non-life products and vice versa. Now look at LIC with the kind of network it has. As and when this approval is in place, I think they are uniquely positioned to become a very large health insurance company to begin with, and then maybe other general insurance products as well. The kind of network LIC has, I'm pretty confident that they will be a different company 1 year down the line, assuming these reforms get through sooner than later. So LIC is the other theme which I want to definitely consider.
LIC looking very attractive to Sudeep heading into next year. But also time now for some more interesting opinions on the markets. We caught up with a whole host of experts, the likes of Gautam Shah, Navneet Manoj, as well as Shankar Sharma, to understand where one should park their money in the new year. Let's go across and listen in to their future outlook.
Real estate and metals. I think the way DLF has come back, Loader Developers has come back, Shobha has been sustaining. I think real estate is going on to make new lifetime highs and beyond. And metals, I think after all the news flow that we got from China, is just setting up for a move back to lifetime highs. So these two pockets of the market, we remain quite positive.
In next 20 years, China will lose 20 crore people in its workforce because of the aging. And now the population has started declining. India will add exactly the same number, few million here and there, 20 crore people to its workforce. So 20 crore addition and 20 crore deletion. So if somebody has to produce now, despite all the efforts that Trump will make, and I'm sure they will have some success on reshoring or friendshoring and whatever. But India really has once in a generation, once in a lifetime opportunity to get manufacturing back.
Big top-down, gold appears to be a fantastic structural trade due to a variety of reasons. Too long to go here, but I think it's a secular trade. Investing in tech within India itself, because I do believe that companies that are leveraging AI, leveraging stuff like that, will be huge winners.
Renewable energy has been a big theme that has been working out well. It's a focus area of the government, and now it seems that financing is something that is going to get easier for the renewable energy projects as well. That's the detail that my colleague Prakash is picking up. Let's take it across to him to get more understanding of what the story really is. Prakash, take it away.
Yes, we are learning from our associate that the government is likely to take several steps to speed up funding for renewable energy projects going forward. We're given to understand that the Ministry of New and Renewable Energy is preparing a proposal to approach the Finance Ministry very soon. In fact, the Ministry is in favor of enhancing priority sector financing beyond rupees 30 crore, and that too on the basis of size of the renewable energy projects. We're given to understand that the industry has also approached the government to include new sources of renewable energy under the ambit of priority sector financing that include projects like green hydrogen, green ammonia and battery storage. Sources are suggesting that the Ministry of New and Renewable Energy is also in favor of imposing financing obligation on banks for renewable energy projects. We are given to understand that the Ministry of New and Renewable Energy is likely to hold stakeholder consultations in mid-January next year, where a host of issues will be discussed with the banks and renewable energy companies. And then all these issues will be discussed with Finance Ministry and RBI officials. That's a very significant development coming in. As you are aware that India needs more than 32 lakh crores of investment in RE sector in next 6 years to meet 500 gigawatt renewable energy capacity.
Okay, so that's the exclusive word coming in on the financing of renewable energy projects, the potential ease of that as well going ahead. Prakash, thanks so much for taking us through that. Kunal, give us a sense of what these energy stocks are looking like on the charts to you, because if you take a look at the month-to-date December moves coming in, Nifty Energy is the biggest loser across the board, a 6.5% cut coming in. Tell us what sense are you making of this index, and would things look better for all of these stocks if this exclusive that Prakash has just given details to us about, if that actually happens and turns true?
Well, in fact, this has been one space where there's not just been a correction, but there's been a significant trend on the downside for many of these names. So first on the Nifty Energy Index, from a point when the index was almost at 45,000, 46,000, I think mid of August or start of September, towards a point where the index has fallen down by almost 9,000 to 10,000 points, now on the verge of breaking below 35,000 levels. So that's a very sharp correction. The manner of the breakdown for the index has been into a clear pattern of lower highs and lower lows, and even in the recent past, like for example the end of November, start of December, where the markets took the Nifty took a rally of almost 1,500 points. Even in that kind of a scenario, this index continue to form a lower low pattern for itself. So that's a concern for Nifty Energy Index. The index right now is drifted almost 10%, more than 10% below its 200-day moving average, which means that there could be a possibility that the index may drag for some more time, and there could be a time-wise consolidation. But I don't see any major revival coming back into the Nifty Energy Index as such. Even if you look at the components, for example, the likes of REC, PFC, NTPC, etc. Many of these stocks have given significant breakdowns of sorts, and these are low beta names. So when low beta stocks, they get into a correction mode, the correction starts to convert themselves into a trend. So that's the concern for many of these names, that it's not just been a short-term correction or a mean reversion phases. There have been significant evidences on the charts that this has been a major downtrend for many of these stocks. We'll have to wait out for a revival for the many of these stocks, and confirmation of a breakout. So if that happens only, then I would expect a recovery or a major uptrend come back into Nifty Energy Index. As of now, the evidence is not there for any kind of a major uptrend or revival into the index as of now.
Okay, not looking at a major revival of sorts when it comes to some of these energy names or even the power ancillaries, the likes of PFC, REC, etc. But Sudeep, what's the sense on revival in consumption? And I'm not talking about the affluent in the higher end of the K-shaped kind of spend that we are seeing. I'm talking about the mass segment. Do you think value is now available on the table to take a dip in some of these staple FMCG names, or still some time away with respect to calling that recovery?
Absolutely, there is value on the table. Look, we are a country with 140 crore population. We have a bunch of companies in the FMCG space which are pretty well managed and run. Yes, they had a challenge as far as rural demand is concerned. Then rural picked up, urban demand slowed down, and they're having challenge as far as urban demand is concerned. But I strongly believe that Q4 onwards, we will see pickup in demand, and the green shoots, initial green shoots are already visible when you find inflation coming down and things like that. So I am a believer in the fact that this is a great time to pick up some of these top quality FMCG names and build your portfolio. Maybe a HUL, maybe a Dabur, maybe a Britannia. And we have seen some amount of value buying in these counters in the recent past, and probably that trend will continue in the near future as well.
Just a counter on that note, you spoke about a bunch of stocks that are looking good from the consumption space, the likes of Dabur, HUL, Britannia. All of these stocks are gearing up to undertake price hikes in the near future or spilling over to the next quarter. You have that on one hand. You have the other headwind coming in that palm oil and other commodity inflation continues to persist. Do you believe that even amid headwinds and challenges like this, FMCG could continue to do well going ahead?
Absolutely believe. Look, the turnover growth of an FMCG always depends on a combination of volume growth as well as price increase. So it's a combination. Sometimes it's 2/3, 1/3, sometimes it's 50-50. So this combination takes the turnover of FMCG companies forward, and that is pretty much the case. There has been an inflation. They haven't been able to take price hike for some time. They have done some readjustment of the pack size, but price hike is in the offing. Obviously, you pointed out rightly that palm oil prices have gone through the roof, and some amount of correction, particularly the major consumers of palm oil, which is the soap companies, the Marico. I think they need to take price hike, and they will take price hike. But it doesn't stop people from consuming, and I think consumption as a theme, particularly for the FMCG products, will continue to remain robust. One or two quarters this side, that side, doesn't change the long-term story of India, which is 140 crore population and growing.
Okay, point taken. So have to see what's really happening with the consumption sector, not only from a demand point of view, but a supply point of view as well, because a lot of raw materials have been haywire. Talking about haywire, it's the market which is like that at the moment. You have us at around the 23,730 thereabouts. So we've managed to hold on to 23,700, but let's see where we head when it comes to the day of expiry, because overnight we're not going to get many cues. A lot of markets across the globe are shut on 26, which is Thursday. Of course, the UK market will still be shut for Boxing Day, but I guess as it is activities on the lower side towards the end of the year, and that's exactly perhaps what we are waiting by for, that finally some news flow could ebb off and we can have perhaps somber end to the year, because it's been a very, very hectic year with the kind of news flow that we have seen, right from elections to the IPO market to all the news flow that has been surrounding the central banks as well. But we'll have more data come by, so initial jobless claims data, as well as I think HUDCO is the one which is going to have a meeting on Thursday to discuss fundraising and the lock-in ends for one of the important companies as well, right? Which one is that?
Green Energy. The lock-in period will be ending for that stock as well. So that's also going to be an important stock to watch out for, because Anisha, recently we've seen that every time there's a lock-in period that's ending for a stock, we've seen some volatility coming in. And similar was the case for Swiggy, when a few days ago the lock-in period for Swiggy got over, and you had a significant amount of equity that got out of lock-in of the anchor investors as well. So there was some volatility that came in on the charts of Swiggy. Let's pull up that chart and take a look at what that stock is up to. Last 1 month itself, there's been a 35% uptick coming in. JP Morgan has given some very ambitious targets coming in for Swiggy, the highest in fact that we've seen in a very long time, coming in from a brokerage for Swiggy. That's 730 rupees per share is the price target that JP Morgan has given going ahead. So that's a stock that's done well. Kunal, very quickly give us a sense of what you are spotting on the charts for Swiggy.
So a very limited price history, but then over the last 1 month or so, the stock has looked very, very strong, attractive. There's been a very good build-up of volumes. Whenever we've seen the price action to be a lot more robust, and when the stock gets into a correction, like for example in the last 2 days, we've seen the average volumes drop down to just about 1.5, 1.2 CR for Swiggy whenever the stock consolidates. And when the stock was moving up higher, the volumes were to the tune of almost 3x to 4x from an average volume of 1 to 1.5. So which means that we are looking at the stock getting back into an uptrending phase. And this dip opportunity in the last couple of days, which has happened for Swiggy, should be taken as a good buying opportunity. 560, 565 seems to be a good base, and on the upside, we could be looking at 620 as a near-term target for Swiggy.
Okay, so that's a near-term target for Swiggy. In the meantime, just wanted to mark the dollar index as well, because rupee has weakened further and dollar index is yet again above the mark of 108. So something that the Indian markets have been tracking very closely. Come Monday morning perhaps, or rather Thursday morning, we'll again be tracking some of these important data points. But for the day, at least we have ended in the red for now. 23,750 is where the index is at. What managed to hold in the green were the sectors of auto as well as FMCG. So select name from those pockets held out. But clearly metals, IT, PSU banks, Nehi were on the back foot.
The market breadth is looking like today, not looking very good when it comes to the broader markets, because no show of support coming from there. You, however, had the small cap index that did pretty well over the course of the day and continues to in fact hold on to gains, although they are minor in nature. If you take a look at some stocks that have been buzzing today, Greaves Cotton was a newsmaker on the back of its subsidiary filing for a DRHP. You have BPCL that was in focus. Biocon is a stock that's held up pretty smartly in today's trade. You have Gulf Oil also on that teaming up with Nara Energy, so that stock did well. Sagility India, that stock has been locked in upper circuit of 5% ever since the get-go, because you have a JP Morgan overweight initiation coming in with a target price of 54 rupees per share. That stock is already very close to 49, so looking good for Sagility India as well. Sectorally today, like Anisha mentioned, what did good was only the auto and the FMCG pack. Both of these looking good. Bharat Forge, Tata Motors, TVS, Eicher, M&M, Ashok Leyland, all of these looking good for auto. From the FMCG space, you have United Breweries, Radico, Nestle, ITC, Britannia holding up pretty smartly. However, what lost luster in today's trade, if you could call it that, and was not shining too brightly is Nifty Metal, the biggest sectoral loser today, led lower by SAIL, Apollo, APL Apollo, Nalco, JSW Steel. All of these stocks did not do well, followed by Nifty Media. PSU banks have taken a beating today. Bank of Maharashtra, SBI, Union Bank not doing all that well at all. Followed by that, you have Nifty IT trading with cuts of roughly 0.3%. So Emphasis, Infosys, Persistent did not do well. Realty managed to slip onto the red on an intraday basis. So that's also a sector that's not done pretty well at all. But that's how we're ending the trading session. Starting shop for the day 23,700. At least we have maintained to hold on to those levels on the Nifty. Thursday is going to be an interesting day to watch out for. You have the last Nifty expiry of the year coming in. Let's see what Thursday's trading session holds on for us.